Are we starting to see prices in the U.S. housing market actually rebound? Well, let's take a look. Hi, I'm Nick with the Iannitti Group, coming at you with a real quick market update for May. Rebound may be a strong word, but things are definitely starting to stabilize. I thought this was interesting. Doug Duncan here, Fannie Mae basically said on a quarterly basis, home prices rose a seasonally adjusted 1% in the first quarter of this year. That's great news, right? And it also shows there's a lot of pent up demand still. We know that things started to slide last year as mortgage rates doubled in a single year, never happened before. But this is maybe a better way to look at it here from Case Shiller, FHFA. You could see where prices have started to come back here at the beginning of this year. And what this tells us is we're not going to say that prices aren't going to still continue to fluctuate. I think what this shows, though, is anybody who was calling for some incredibly steady decline in the housing market, that's probably not going to be the case. We could also say that maybe some of the deepest cuts that homeowners took are already behind us right now, as buyers are starting to realize that the rates that we're looking at now are kind of the new normal. Okay, I thought this was something worth taking a look at as well too. 92% of all major U.S. markets were seeing declines. This is about 5 months before this past March, and then all of a sudden those 180 markets basically turned that around to where we're seeing prices going the opposite direction. We'll probably also start to see this here in a couple of months where a lot of these reporting agencies, this is Fannie Mae, are going to revise their forecast. This is good news, going from 4.2% up to 1.2%. So as far as looking at inventory and foreclosure update, realize, the foreclosure stuff, I talk about it every month. I don't want to, but these headlines force me to. So, real quick, inventory, anything, 7 months worth of inventory and above, definitely buyer's market. 6 months is what I consider a balanced market. Anything, that 4 and 5 months worth of inventory, definitely a seller's market. We're still hovering right around that 2 to 3 months worth of inventory nationwide. So still very much in a seller's market, which is why we're seeing this price integrity kind of holding strong. Okay. But when it comes to foreclosures, again, I always say it in all these videos, headlines do more to terrorize than they do to clarify. So U.S. foreclosure activity continues to climb in Q1 of 2023. Well, and that's from Adam data. Factually, that is correct. However, again, there's no context with that, right? And you look at all these other headlines that just pile on, people are going to be losing their homes and foreclosures are on the rise in these states and, all this other yada, yada. Now, don't get me wrong. I don't want to make light of foreclosure. I'm not. It's a serious thing. And if someone has to go through that, it's horrible. I would not wish that on anybody. What I'm just saying is we need to keep these numbers, in line with the context, right? So keep in mind that before the pandemic, this is what foreclosure numbers look like. And then we went into the pandemic. There was a moratorium. People could not foreclose. So we had about 1 million foreclosure shortage. 1 million foreclosures that would have normally happened did not happen through the pandemic. Well, of course, those are going to start to catch up as we come out, right? But this is a better way to look at it right here. This is all the way up to the first quarter of this year. When you look at these filings, yes, they're increasing here, but realize we're nowhere near, some of this that's gonna really affect the market. I think this is another good way to look at it too. 65,000 people started the foreclosure process here in the first quarter of this year, but realize lenders only repossessed 12,518 homes in the first quarter of this year. When you consider the sheer size of the U.S. market, 12,518 homes is it's not even a drop in the bucket. You know what I mean? It's practically vapor. So we need to keep that in mind. Okay. This is probably more important though, right? The Fed met basically this past March, and they said, given their assessment of of potential economic effects of the recent banking sector developments, right? They're talking about the collapse of Silicon Valley Bank and some other banks that had some issues. They're basically thinking that we may have a mild recession later this year with a recovery in the subsequent 2 years, right? I've been saying we've been in a recession for quite some time, and I use the definition of 2 negative quarters of GDP, but just for the sake of this video here, the National Bureau of Economic Research, they define a recession as a significant decline in economic activity spread across the economy, lasting more than a few months, normally visible in real GDP, real income, employment, industry, all this other stuff, right? So what we need to think about, though, for the purpose of this video is how would housing be impacted by a recession? Talked about this many a time, right? Bankrate, I thought, summed it up pretty well, though. During traditional recession, the Fed will usually lower interest rates to stimulate the economy. This creates an incentive for people to spend money. right? They also typically lead to more affordable mortgage rates, which typically leads to more opportunity for home buyers. Okay, so maybe a better way to look at it is, what are the pros and cons of buying during a recession, right? Pros are there's less competition, prices may be a little bit lower, the rates may be lower, right? The cons are there's going to be stricter lending requirements, there may be fewer options available, and there's still going to be overlying economic uncertainty, right? If people's jobs are hanging in the balance, that could be an issue. Okay. However, when we look at home prices, right, I've shown you this chart many a time, right, from CoreLogic and the balance. When we look at the past the last 6 recessions, right, home prices rose in 4 out of the 6. Now this is the one that everyone remembers, right? So 1991, we saw a 1.9 reduction. Okay, that's whatever. It's nothing super terrible. But this is the recession that everybody remembers, right? In 2008, the Great Recession. Realize this was brought on by the housing sector. This was brought on by faulty lending requirements. Basically, the lenders, the banks, giving money to people that shouldn't have had it. So yeah, this sucked down home prices with it, right? Because it was directly related. But typically, we don't see home prices related to recessions, right? And that's because people still need a place to live. What we do typically see, though, are mortgage rates fall during those same recessions. This is what we're looking at. We don't know how big of a mortgage rate drop we might see if there is a recession. It depends on the strength of the recession later this year, and realize that the Fed doesn't have a whole lot of room to move. Okay, but another thing to think about is when we look at just the last quarter of last year, look at how many mortgages basically were written that were below that 5% mark. Okay, that's a huge amount of mortgages written below 5%, right? And again, we can't get away from this census and Adam data that essentially almost 39% of people in the United States own their home free and clear with no mortgage. Okay, out of the people who own a home, almost 29% of them have more than 50% equity in there. Okay, so keep in mind this is huge as far as the stability of the market, and it's part of the reason why we're seeing prices kind of holding where they're at. There's just not a lot of inventory out there anyway. Yes, our volume has been down. Yes, our prices are down in some markets, right? Some of them not so much. But just keep that in mind. It's still about supply and demand, even though rates are moving. So anyway, if you have questions about what these numbers mean for you, just reach out. I'm more than happy to answer any questions that you have about it. Also, keep an eye out for my San Diego and Sarasota housing market updates, where I'll dive specifically into the numbers in those markets. And that's it. If you have any questions about what's going on in your neck of the woods, always happy to answer those too. So just let me know. And thanks so much for watching. And remember, who you choose to negotiate for you absolutely matters.